Hey, what's up, guys? This is Sam, and I'll be doing the free video for June 11th, 2021. So as always, after or before we make the free video, we make the premium video for the folks in the gold room, and we always do a trip around the world, right? We look at every index, so the S&P, the Nasdaq, the Russell, the Dow. We look at European markets, we look at Asian markets, we look at currencies, we look at different sectors. We look at volatility, and we look at bonds, and then we put it all together, and we try to understand what the market's going to do next week, basically. And this is kind of an interesting setup this week, going into next week, where it's basically a continuation. If you watched our last Friday video, the free video that we did on Friday, we were talking about semiconductors. And I think I might have been just a few days early on the idea, but I think that's the idea that's eventually going to play out into next week and pretty much potentially through the summer. So I kind of want to show you the steps that I kind of arrived there, right? Because a lot of folks, they've been trading what's called the reflation trade or the inflation trade, which is, the Caterpillars, the Deeres, the banks, the Goldmans of the world, energy, things like that, right? And then what's been kind of languishing is tech. So I'm going to show you a couple of things that we look for to tell what part of the market traders want to be involved with, and it'll have to do with bonds. So let me start actually here with the Dow. And the reason I want to start with the Dow is because the Dow is actually kind of an inflationary trade. Inflationary being all the things that I just talked about, and deflationary being high beta tech like software and things like that. And the Dow here, the DIA, relative to the other indices, has a pretty kind of a lame setup. Now, it's still a bullish setup, certainly. It's without question a bullish setup, but it's just kind of lame, right? Look at the action here, right? No new high, a bunch of gap ups, closing near the low, gap up, close 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 near the low. It's just over and over again. Bunch of selling volume in here as well that you can see. It's still bullish, mind you. It is bullish, but it's just kind of a crappy bullish setup relative to something like, let's just use the SPX, right? The SPX is kind of a nice mix because it has all the trillion-dollar tech companies that are doing well, and then it has a little bit of inflationary things. So if I showed you the Nasdaq, you would see it a lot. You would see how strong that is relative to the Dow. But you see here how the SPX, unlike the Dow, actually closed above the new high, closed really strong. The setup continues to print higher. No issues here on your momentum, etc. Right? So it's two bullish charts, the Dow and the SPX that we just looked at, but one is significantly much more bullish, and that is the SPX. Now, why is that? Well, we kind of covered it. The reason that is because the SPX, unlike the Dow, has a lot more of these trillion-dollar tech companies that are doing well. It has Amazon. It has Tesla, which has been popping off lately. The Apple is in both. Amazon, we just talked about. Let me think of another one here. Facebook, for example, is another one. Google is another one. Google's a big one. You should focus on Google. So how do we arrive at that? How do we know whether we should be in inflationary things or deflationary things? And the answer, and the reason that we've been pushing the deflationary tech side of things, at least for the last couple of weeks, although it's been a little early, I would say, although it's shaping up now. And the answer to know where you should be involved is really the bond market. So I'm going to choose to show you the bond market here using the TNX, which is just the direct 10-year interest rate. You could look at this with TLT. Just understand that if you're looking at it with TLT, it's flipped. So up on TLT is down on this chart, and down on this chart is up on TLT. And what I would say that all traders need to do going into next week is spend some time using your own indicators, your own analysis. Look at the TNX chart and determine whether you think it's going to go lower from here or higher, right? And then from there, you can determine what part of the market to be in. So, for example, John Carter in the main room, he's been long bonds. He got long bonds somewhere back here. Actually, potentially up here somewhere. I don't remember exactly, but definitely before the big move. And if you look at TLT, TLT is doing this, right? It's going straight up, and that's what he's long. Keep in mind that this goes lower, TLT goes higher, and that's what John is betting on. So as this chart starts to break down, and you can see the incredible trend that it's coming out of, right? Just holding that weekly 8, very strong trend. But we're starting to see some signals here that the bond market could be a buy, meaning that the interest rates go lower, and then that shifts our focus, right? We don't want to be involved in the Caterpillars anymore. We don't want to be involved in the Deeres. We don't want to be involved in the Goldmans or the Energies, or even potentially like things like copper might even get hit. And you want to shift your focus back to tech. So from what I'm seeing here in the bond market, you're compressing on the weekly. You have multiple sell signals, which you have not had on the weekly. The trend oscillator is back below 50, the center line, after being above it. That's not great. And you've taken all your daily moving averages, and now they're all kind of waterfalling lower, right? So I would say that as long as the TNX or the 10-year interest rate stays below 1.5% next week and pretty much through the summer, then you definitely want to start rotating back into tech. So I'm going to share my watch list with you. I think, generically speaking, things like semiconductors, which we covered last week, I think are a great play on that. They kind of land in this happy medium between tech, between inflation and deflation. And then things like Microsoft, Amazon, Google especially, all should continue to do well. Software in general. So let me share my watch list with you. This is the same watch list that I shared with the premium group, and happy to share it with you. So let me give you the daily one actually. So this is these are the setups we're going to be looking at next week: Apple, Intel, Cisco, tech. A couple of semiconductors are in here. I think those should continue to be focused on. Visa, I think, looks good. Airbnb, I think, would be a nice play on this. DoorDash is a good play. Zoom. So pretty much all the stuff that really fell out of bed for the last 3 months should be the focus. So hopefully everything that we just talked about clicks. The first thing you want to do is understand what the TNX is doing. If the TNX is going up, then you want to be in Caterpillar, industrials, banks, and energy. However, we just looked at the TNX, the 10-year interest rate, and we noticed that it has a lot of sell signals here. So when that flips and the TNX starts to drop, you definitely want to rotate out of those names, because you can look at Caterpillar the last 2 days, it's gotten crushed, and look at things more like software, so like Team or Microsoft or Google, things like that. And all of that should continue to benefit. So we'll go ahead and make it kind of short and sweet for this one. This is a big picture idea that we're sharing with you, so make sure you have a good understanding of it, because it'll serve you very well from basically next week until the end of the year if you understand this dynamic between inflation and deflation and where you should be putting your money as a trader. All right, guys, that's my time. Have a great rest of your Friday. Have a great weekend, and we'll see you next week. Cheers.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me